Good day! Again, this is Francis Kaliwan and welcome to another video on lessons in financial accounting and reporting. Our topic for today is accounting for intangible assets, and our discussions are based on the provisions of International Accounting Standards number 38, Intangible Assets. Just a background, no? This standard was issued by International Accounting Standards Committee in September 1998 to replace IAS 9 Research and Development Cost, which itself replaced the old version, which is called Accounting for Research and Development Activities, that had been issued in 1978. The International Accounting Standards Board adopted the IAS 38 in April 2001 and made some revisions in March 2004 and amendments in January 2008 and May 2014. Other IFRS such as IFRS 10, IFRS 11, 13, and 15 also made minor consequential amendments to this standard. Basically, the objective of IAS 38, Intangible Assets, is to prescribe the accounting treatment for intangible assets that are not dealt with specifically in another standard. So, parang catch basin siya, no? If there is no specific standard that deals with an intangible asset, we shall apply IAS 38. IAS 38 requires an entity to recognize an intangible asset if and only if specified criteria are met. Later, we will discuss what are those criteria. And this standard also specifies how to measure the carrying amount of intangible assets. And this requires specified disclosures about intangible assets. Okay? So, next. Before we proceed, let us have these learning outcomes first. So, number one, the student should be able to describe the nature of intangible assets, explain the recognition criteria for intangible assets, identify the costs to include in the initial measurement of intangible assets, record acquisition, formulate entries for the amortization and impairment, including the subsequent expenditures on intangible assets, and then present intangible assets in the statement of financial position, and finally, identify the disclosure requirements for intangible assets. Okay, now so let's discuss the scope of IAS 38 intangible assets. So this standard shall be applied in accounting for intangible assets except number one, intangible assets that are within the scope of another standard. So, if another standard prescribes the accounting for a specific type of intangible asset, that means an entity applies that standard instead of IAS 38. Say, for example, intangible assets held by an entity for sale in the ordinary course of business. We have IAS 2 for that because those are recorded as inventories rather than intangible assets. Then we also have leases of intangible assets. So those are accounted for using 16, not IAS 38. Goodwill arising from business combinations, we have IFRS 3 rather than this standard. And non-current asset classified as held for sale or non-current intangible assets classified as held for sale. That is to be accounted for using IFRS 5 and not IAS 38. Next, financial assets as defined in IAS 32, recognition and measurement of exploration and evaluation assets in IFRS 6, and the expenditure on the development and extraction of minerals, oil, natural gas, and similar non-regenerative resources are also scoped out from IAS 38. Next, the definition of an intangible asset. So, an intangible asset is an identifiable non-monetary asset without physical substance. The problem actually with intangible assets is it lacks physical substance. For example, a computer software is an asset but it does not have physical substance. The compact disc or the CD is just a disk or container of the software, but it is not the software. Same with copyright or patent, which are also intangible items. The legal documentations or the papers are just proofs of the presence of the asset, but the papers are not the intangible asset. So to solve that problem, the standard emphasized three things which are called definition criteria. And these are identifiability, control over a resource, and existence of future economic benefits. So just clarification, if an item within the scope of this standard does not meet the definition of an intangible asset, the expenditures to acquire or to generate internally of those items are expensed as incurred. Okay, so let's discuss the definition criteria. So the definition of an intangible asset requires an intangible asset to be identifiable. Why? To distinguish it from goodwill. And when can we say that an item is identifiable? Number one, it is separable, or it is capable of being separated or divided from the entity. And it can be sold, transferred, licensed, or rented, or exchanged either individually or together with another related contract. And number two, aside from being separable, an item may also be considered identifiable if it arises from a contractual or other legal right. Next, control. An entity controls an asset if the entity has the power to obtain the future economic benefits flowing from the underlying resource. Actually, this is in accordance with the definition of an asset. Remember, the recognition of asset is dependent upon controllership and not legal ownership. So, we may not have legal right over an item, but we control the item, and therefore we can recognize that item as our asset. That is according to the framework. Next, future economic benefits. So the future economic benefits flowing from an intangible asset may include revenue from the sale of products or service, cost savings, or other benefits resulting from the use of the asset by the entity. So there must be a future economic benefits that will flow to the entity through that intangible asset. Now, the recognition criteria. So, actually, this is similar across assets, no? So, an intangible asset is recognized if and only if, number one, it is probable that the expected future economic benefits that are attributable to the asset will flow to the entity and its costs can be measured reliably. So, same with other assets. Now, how about initial measurement? So, an intangible asset shall be measured initially at its cost. Now, the question is, what is cost? So, same with PPE, property, plant, and equipment, the cost of an intangible asset is computed depending upon the manner of acquisition. So, for the case of intangible asset, IAS 38 enumerated 5 ways in order for us to acquire an intangible asset. Number one is separate acquisition. So the cost of a separately acquired intangible asset comprises, if it is a cash purchase, the purchase price adjusted for import duties, non-refundable purchase taxes, and trade discounts and rebates, and the directly attributable cost, or those costs that are incurred in preparing the asset for its intended use. And what are the examples of those directly attributable costs? The standard provides 3 examples. Number one is the cost of employee benefits. Number two, the professional fees arising directly from bringing the asset to its working condition. And number three, cost of testing or testing costs, whether the asset is functioning properly. Now, how about if the asset is acquired on a deferred payment basis? So, if payment for an intangible asset is deferred beyond normal credit terms, its cost is the cash price equivalent. And the difference between the cash price equivalent and the total payments to be recognized or to be paid will be recognized as finance cost or interest expense, which will be amortized over the period of credit. Actually, that is also discussed in IAS 23, accounting for borrowing cost. Next, aside from separate acquisition, we have acquisition as part of business combination. So, according to IFRS 3, so we shall use IFRS 3, business combination. If an intangible asset is acquired in a business combination, the cost of that intangible asset is its fair value at the date of acquisition. So, if an acquirer will purchase a business, and then there are intangible assets that are recognized by the acquiree before the purchase, then the acquirer will also recognize intangible assets as long as they are distinguished or separately to be recognized from goodwill. Okay, so an acquirer recognizes at the acquisition date separately from goodwill an intangible asset of the acquiree if the asset meets the definition of an intangible asset. Third, acquisition by way of government grant. So, in some cases, an intangible asset may be acquired either free of charge or for nominal amount by way of government grant. An example natin dyan, for example, airport landing rights, license to operate television or radio stations. Say for example, for the case of ABS-CBN, diba, the franchise to operate a television station in the Philippines is granted by the Congress. Import licenses or rights to access other restricted resources by the government. So those are example of intangible assets acquired through government grant. So in accordance with IAS 20, that's our accounting standard for government grant, an entity may choose to recognize the intangible asset and the grant at its fair value at the date of grant. But if the entity chooses not to recognize the asset initially at fair value, the entity may recognize the asset initially at a nominal amount or zero plus the directly attributable costs. Next, intangible asset acquired through exchange. Again, this is very much similar with property, plant, and equipment. So, exchange of asset. So, we are to determine first if the transaction has or lacks commercial substance. If the transaction has commercial substance, we are to record the transaction, the exchange, at fair value, and any gain or loss is also recorded. Whereas if the transaction lacks commercial substance or the fair value of neither the asset received nor the asset given up is reliably measurable, no choice. We are to record the transaction using the carrying amount of the asset given up. So the amount to be debited to the intangible asset acquired through exchange without commercial substance is the carrying amount of the asset given up, and no gain or loss for that matter. Okay, next. So we have internally generated intangible assets. This is the fifth way to acquire an intangible asset. So, in the case of internally generated intangible assets, in addition to complying with the general requirements for the recognition and initial measurement of an intangible asset, an entity assesses whether an internally generated intangible asset meets the criteria for recognition by first classifying the generation of the asset into research phase and development phase. So by definition, the standard actually defined research phase and development phase. Research phase is the original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. So the keyword there is gaining new knowledge. That's research phase. Whereas development phase, or development is the application of research findings or other knowledge to a plan or design for the production of new or substantially improved materials, devices, products, processes, systems, or services before before the start of commercial production or use. Kasi if we are to study this timeline, we have the research phase, we have the development phase, and after the development phase, it's already the commercial production phase. So we research a particular product, we develop a product, and finally, we produce the product. So these research and development phases precede the commercial production. So after IAS 38, probably the next standard which will be applied is IAS 2 inventories, because that is already for the commercial production of the product. So if an entity, this is according to 38, cannot distinguish the research phase from the development phase of an internal project to create an intangible asset, ano yung treatment? The entity treats the expenditure of that project as if it were incurred in the research phase only. Now, why is it very much important to distinguish research phase and development phase? Because the distinction of research and development phase determines the capitalization of the cost incurred in relation to the internal generation of intangible asset. According to IAS 38, no intangible asset arising from research phase shall be recognized, meaning all expenses incurred during the research phase are expensed outright. And an intangible asset arising from the development phase or from the development phase of the internal project shall be recognized only if we can demonstrate these 6. Ang tawag natin dyan is commercial viability. So what are the criteria to be satisfied in order for us to say that there is a commercial viability for the particular intangible asset? We have these 6. So the entity can demonstrate, number 1, technical feasibility of completing the intangible asset. It is feasible that the asset will be completed. The entity's intention to complete, the entity's ability to use or sell, how the intangible asset can generate probable future economic benefits, or is there a market for that intangible asset so that we can generate benefits from that intangible asset to be generated. The availability of resources to complete the development of intangible asset, and finally, the ability to measure reliably the expenditures during the development of the intangible asset. In short, if these criteria are not satisfied, expenses incurred in the development phase or cost incurred in the development phase are expensed. So, only when these criteria are met, costs incurred in the development phase are capitalized as the cost of intangible asset. Now, the question, what are these costs? That's our next slide. So, the cost incurred after the commercial viability during the development phase, wherein these 6 criteria are met, these are the costs which are to be classified to be capitalized as the cost of intangible asset. Okay, so now what are the costs to be capitalized or to be included as the cost of internally generated intangible assets? So remember these costs must be incurred after the commercial viability during the development phase. We have number 1, materials and services used or consumed. Cost of employee benefits. So these are the salaries and wages of those who are directly involved in the generation of the intangible assets. Fees to register legal rights, so the payment to the government agencies. And finally, amortization of patents or licenses used. So maybe during the generation of the intangible assets, we are using some patents or licenses. So the amortization of those patents and licenses are to be capitalized as part of the cost of the intangible asset. But IAS 38 explicitly, no, enumerated these intangible assets which are not to be um, capitalized or recorded or recognized in the books if internally generated. So goodwill, brands, mastheads, publishing titles, and customers list. Meaning, if these items are generated internally, they are not to be recognized as intangible assets in the books. They are to be recognized if they are acquired through other means, like what we've discussed a while ago. So separate acquisition, by way of government grant, exchange, or um, business combination. Next, what is the treatment for expenditure on an intangible asset? So, according to the standard, expenditure on an intangible asset shall be recognized as an expense when it is incurred, unless, number one, it forms part of the cost of an intangible asset that meets the recognition criteria. So by itself, intangible asset din siya. And number two, the item is acquired in a business combination and cannot be recognized as an intangible asset. Um, Say for example, the asset cannot be distinguished against or from goodwill. So if that is the case, it forms part of the amount recognized as goodwill at the acquisition date. Next thing is, the standard is very much specific on this now. Expenditure on an intangible item or asset that was initially recognized as an expense shall not be recognized as part of the cost of an intangible asset at a later date. So, pag expense ka before, expense ka forever. Kasi nga, di ba, it is closed na money at the end of the year. So, expense before shall not be recognized as an intangible asset at a later date. Okay, last topic, subsequent measurement. So, what do we do after the initial measurement? So, an entity may choose either the cost model or the revaluation model as its accounting policy for intangible assets. So, similar with PPE. So, for cost model, it's cost less accumulated amortization and accumulated impairment loss if there is any. So before we proceed with the revaluation model, let's discuss first amortization. So what is amortization? It is the systematic allocation of the depreciable amount or the amortizable amount of an intangible asset over its useful life. So this is similar with depreciation. So allocation of the cost over the life. Now, how about revaluation model? So, revaluation model, it's revalued amount, which is the fair value at the date of revaluation, less any subsequent accumulated amortization and any subsequent accumulated impairment loss. So, after initial recognition, an intangible asset shall be carried at a revalued amount, which is, as I've mentioned, the fair value at the date of the revaluation. Now, revaluation shall be made with such regularity that at the end of the reporting period, the carrying amount of the asset does not differ materially from its fair value. So if the entity chooses the revaluation model, revaluation shall be made with regularity para the fair value and the carrying amount will not differ materially. If an intangible asset is accounted for using the revaluation model, ito yung sinasabi kong one for all for the same class. So if an intangible asset is accounted for using the revaluation model, all the other assets in its class shall also be accounted for using the same model unless there is no active market for those assets. So say for example, the company has 10 types of equipment. If the entity or the company will use as its accounting policy the revaluation model for one equipment, all the 9 equipment will also be accounted for using the revaluation model because they are in the same class. Okay. Now, specific only to revaluation model is this concept. If intangible assets carrying amount is increased as a result of revaluation, the increase is recognized as number one, reversal of any impairment to be reported in profit or loss if there is any impairment. Otherwise, the increase as a result of revaluation is recorded in other comprehensive income. Now, if the intangible assets carrying amount is decreased as a result of revaluation, so decrease naman ngayon, the decrease is recognized number one as reversal of any revaluation surplus reported in other comprehensive income. And if there is no revaluation surplus, as impairment loss reported in profit or loss. So very similar with PPE. So pag nag-increase ang carrying amount because of the revaluation, the increase is recorded as kung merong impairment loss before recovery of impairment. Otherwise, OCI. Kung nag-decrease naman, the decrease is recorded first as reversal of the revaluation surplus. Kung walang revaluation surplus, impairment loss. Okay? So again, same with PPE. Now, intangible assets with finite useful life or limited useful life intangible asset. So, an entity shall assess whether the useful life of an intangible asset is finite or indefinite. And if finite, the length of or number of production or similar units constituting that useful life. So, an intangible asset shall be regarded by the entity as having an indefinite useful life when based on an analysis of all the relevant factors, there is no foreseeable limit to the period over which the asset is expected to generate net cash inflows for the entity. So, ang sinasabi ko lang is it is very much important for us to know whether the intangible asset has finite useful life or the life is indefinite. Because the treatment for subsequent measurement for intangible assets with finite useful life is different from intangible assets with indefinite useful life. The accounting for an intangible asset is based on its useful life. An intangible asset with a finite useful life is subject to amortization. And the amortization method which will be used should reflect the pattern in which the intangible assets' future economic benefit are expected to be consumed. For example, straight line method, diminishing balance method, units of production, or revenue to be generated. So meaning, it is not always a straight line. A straight line is just one of the choices. Or, if the pattern is not reliably determinable, that's the time that we will use a straight line. So, sa problem, titingnan if the problem requires that the intangible assets are to be amortized using, say for example, diminishing balance, then use diminishing balance. Next, the amortization starts when the intangible asset is available for use. So, kahit hindi pa gamit, as long as the asset is already available for use, then amortization will start and ceases or end at the earlier between the date the intangible asset is classified as held for sale, because according to IFRS 5, assets held for sale shall not be amortized, and the date it is derecognized. So, eventual derecognition. Next, the useful life of an intangible asset that arises from contractual or other legal right shall not exceed the period of the contractual or other legal right. So it is important for us to know also the legal life of the intangible assets, kasi hindi pwedeng the useful life exceeds the contractual or the legal life. if the contractual or other legal rights are conveyed for a limited term that can be renewed, so renewable yung life, the useful life of the intangible asset shall include the renewal period only if there is evidence to support renewal by the entity without significant cost. So, i-consider natin ang renewable term if the renewal will not result to incurring significant cost. Now, the residual value of the intangible asset. So, according to the standard, the residual value of an intangible asset is assumed zero unless there is a third party that is committed to purchase the intangible asset at the end of its useful life. So, may willing buyer tayo at the end of the life of the intangible asset, and there is an active market for the intangible asset which will be used as reference of the residual value. Kasi nga naman, without this active market, what will be the basis of the residual value? And it is probable that the market will exist at the end. Yes, because the residual value to be considered is the value of the intangible asset at the end of its useful life. Next, the amortization is charged to profit or loss unless included in the carrying amount of another asset. So, I've mentioned this already kanina, no, na there are instances that the amortization of an intangible asset is part of the cost of another asset. Naalala nyo kanina yung cost of internally generated intangible asset, amortization of patents or licenses. Okay? So, generally, amortization is charged to profit or loss unless they are capitalizable as part of another asset, which is not necessarily intangible asset. Pwedeng tangible asset naman. Inventory, for instance. And finally, the amortization method and period shall be reviewed at least at each financial year end. So every year, any change shall be accounted for as change in accounting estimate using International Accounting Standards number 8. So that's the standard to be used if there are changes in accounting estimates policy. Next. Now, how about intangible assets with indefinite useful life? So, according to the standard, an intangible asset with indefinite useful life shall not be amortized. Next, it shall be tested for impairment. Again, how do we measure impairment? According to IAS 36, impairment of assets, impairment is determined by comparing the recoverable amount and the carrying amount. In the case of intangible asset, annually. So, annual ang testing natin for impairment or whenever there is an indication for impairment. So, again, now for intangible assets with indefinite useful life, not subject to amortization but subject to impairment annually or every time that an indication is present. Now, how about retirement and disposal? So, an intangible asset shall be recognized on disposal or when no future economic benefits are expected from its use or disposal. Actually, the disposal of an intangible asset may occur in variety of ways. Common dyan is sale, although we also have by entering into a finance lease or by donation. The date of disposal of an intangible asset is the date that the recipient obtains control of that asset in accordance with the requirements of the standard for revenue IFRS 15 if we are to sell the asset or IFRS 16 if we are to enter into a finance lease. Now, how about gain or loss? So, gain or loss is reported in profit or loss and the formula for gain or loss on disposal is net proceeds less carrying amount. Okay, so that's it for the concepts of IAS 38 intangible assets. The next video is for exercises pertaining to intangible assets. Thank you.